Alright everyone, Cowboy Trades here, welcome back to the channel. So I just wanted to make a quick video as the CPI numbers are going to be coming out tomorrow, and I specifically wanted to focus on will the markets rally following tomorrow's CPI numbers. I'm going to let you know how I think the CPI is going to be coming in. Is it going to be hotter than expected? Is forecast going to be playing out? What are my targets? And more importantly, if we do see this rally, for the S&P 500 and Bitcoin following the CPI numbers, what are my exact price targets? Now, before we do dive into the price targets, what would make the markets rally? Well, at this moment in time, US core CPI is sitting at 6% and it's forecast to drop down to 5.7%. As we know, the Fed mainly looks at core CPI to guide their FOMC decisions. However, the markets, the retail traders, are going to be more interested in headline inflation. So if we do come over to if we do come over to the US Consumer Price Index year over year, it is currently sitting at 7.1% and is forecast to drop all the way down to 6.5%. Now, I'm personally not in agreement that we are going to be dropping down to 6.5%, but I want to prep you for every type of scenario that's going to be happening right now before I discuss how I've come to the conclusion on my inflation numbers. So right now, 6.5%, once again, let's go with this, that we do get 6.5% tomorrow, even though I don't think this is going to happen. There's two price targets that I've got in mind for the S&P 500. Number one is this price gap we've got here up at 3,995, and the second price target is to push back up to this red trend line at 4,040. What is this red trend line, and why do I think that we are absolutely not going any higher than 4,040? Let's come over to the weekly time frame, and you can see this has been the macro downtrend in place since the 3rd of January. You topped out, topped out, topped out, topped out, and all these tops correlate to a top in terms of liquidity conditions, and right now liquidity conditions are pretty overextended as they are. We talked about this on the channel, so I won't dive into this too much, but every time we have a top in terms of liquidity, we break down, have a buyback, make new lows, break down, have a buyback, make new lows, break down, have a buyback, make new lows. And we quite recently talked about in our last video how we've broken down and we're currently sitting in that buyback in the lower time frames. If I come over to let's look at the past 10 days, you can see we did have that big spike in terms of the bids, asks, and the mid price ran up, and now it's starting to turn down, which makes me think that, once again, even though I'm saying, these are my most bullish price targets, and these would only come into fruition if headline inflation drops down to 6.5%. So take that with a grain of salt. I'm not saying I think we're going to go up to these price targets. I think it's quite likely we fill this gap up at 3,995 because I do believe tomorrow that inflation is going to start coming down. I talked about this on the channel in my last video, but I do believe CPI, at least for this year, has topped out. I do believe there's going to be another spike in CPI in a little while. It's very 50-50 right now, and we're going to look at some metrics which kind of argue why the CPI index in of itself has not topped out at this moment in time, which should still be weakening the US dollar. However, once again, headline inflation coming down to 6.5% seems like a fairy tale in my opinion, considering how we're sitting at 7.1% right now. I do think it's going to drop. There are a lot of signals that I have been seeing, which I will discuss in just one moment. But I personally think it's more likely that the inflation will come down to maybe 6.8%, 6.9%. I do not think we're going to drop all the way down to 6.5%. So with that being said, I do believe that the headline inflation is going to drop tomorrow. I don't think it's going to drop as much as forecast, and we do know if we look at the S&P 500 right now, in the past few days or so, the markets have been pricing in a huge drop in inflation. So Bitcoin as well has been rallying with the S&P 500. The S&P 500 has been on a huge rally, and this has mainly been because the markets think the terminal rate for inflation is going to be back down at 2% in July, which is absolutely ridiculous. I do not think inflation is going to come from 7% in terms of headline right now, 7.1% down to 2% in just another 6 or 7 readings. That seems like a fairy tale to me. But nonetheless, if inflation does drop down to 6.8%, it's likely that we're going to, for the next 24 hours or so, while we're waiting for this to come out, we could witness the market start to price in the rest of this CPI jump before breaking back down. So, either way, it's very likely the S&P 500 pushes up to 3,995, or a more conservative price target would be the 618 Fibonacci, 3,975 before breaking back down. And for Bitcoin, if we come over to Bitcoin, you can currently see we're still beneath the double 786 Fibonacci. So, if you understand Fibonacci's, you know that if you come down to the 786, you bounce, you lollygag, and then you break back beneath it and retest it as resistance, that's bearish. That is not bullish. This does not imply a new bear market. This doesn't imply a new bull market just because we're rallying up for a bearish retest of the 786 Fibonacci. But nonetheless, it's not going to be another 24 hours or so. It's the CPI numbers come out at 8:30 a.m. Eastern time tomorrow. So, check your calendar and check for your country how long that's going to be. But of course, I do think it's likely while we're coming into the CPI numbers, Bitcoin could possibly push up to 17,950, 18,000 or so. And if we do, once again, I don't think we're going to come down to 6.5% for headline inflation. But if we do come up to 6.5%, it's likely Bitcoin could retest its range lows at 19,200 and 18,800. Once again, I don't think this is going to happen. I think inflation is going to come in hotter than expected, but it's still going to be cooler than the previous report. So we're at 7.1%. I think it's very likely we drop down to 6.8% for headline. And this will allow the S&P 500 to push up just a tiny bit higher to the price target, the first price target we mentioned, and also to see Bitcoin push up to, 18,000 or so before we do start breaking back down to the downside. Now, on the daily time frame, Bitcoin has literally been stuck at 100 for a very long time on the stochastic RSI, which is a telltale signal that, for example, if we're no longer in a bear market, then you can throw this out the window on the daily time frame. But in my opinion, we're still in a bear market. So, if you're buying right now, this is pretty much suicide in my opinion. We're still making macro lower lows every single time, and even if we do push up to this 18,000 target and start breaking back down, this is going to be another lower high for Bitcoin. If you want to be privy of the inflation numbers as soon as they come out like that, then be sure to head over to my Twitter at 618_cowboy. I probably will be able to make a quick video tomorrow when the CPI numbers come out. I have been saying I've got sparring practice in London tomorrow, but that's about 3 hours after the CPI numbers come out, so I will be able to get a quick video out. Now, I just wanted to talk about one interesting chart before we do move on to, how I formulated my opinion, why I still think inflation's coming down, but why I think headline is going to be at 6.8% and not 6.5%. There's a few charts that we will discuss in just one second. But as we know on the channel the other day, I talked about this in my most recent Bitcoin and stock market video, Markets Bounce Will It Last. We talked about, of course, in the lower time frames, we were previously talking about this diamond pattern playing out for Bitcoin and diamond pattern playing out for the S&P 500 and a bearish pennant playing out for Bitcoin, which obviously didn't go in our favor. Now, whenever I do get something wrong in the lower time frames, of course, if you've been following me for a while, we haven't got anything wrong in the macro time frames. We've been very right about this bear market. In the lower time frames, what happens day to day, of course, I can't be right 100% of the time. I am going to be wrong every now and then. But with that said, it's important for me at least to go through different charts, look at things that I look at and see where I went wrong and where other charts potentially said, hey, if you were looking at this chart, this would have given you an indication that the markets were actually going to reverse in the lower time frames. So there's this very interesting chart I found, the CBOE. We look at many CBOE charts on this channel, but this is the implied correlation index. If you want to read about what the implied correlation index is, it says right here. Take a screenshot, pause the video. But if we do go back over to the implied correlation index, you can see this is inversely correlated to the S&P 500. Like a lot of the charts we look at, you can see a top over in the implied correlation, massive spike, top in terms of the implied correlation, and we started running back up in the past couple of days. Now, what's interesting is if we come over to the daily time frame, you can see the implied correlation index had a huge spike on the 23rd of December, and then we had another very big spike just here on the 4th of January, telling us once again, as this is inversely correlated, a spike and a top in the implied correlation index implies a bottom for the S&P 500. So once again, look at this spike over here on the 4th of January. And if we come over to the S&P 500, you can see the S&P 500 didn't start having this huge rally. And of course, Bitcoin followed after this. But the S&P 500 didn't start rallying until the 6th of January. So, this chart over here, the implied correlation index using, this summation over here, which once again, pause the video if you want to know how this works. But this chart over here was predicting this rally a couple of days beforehand. Now, if we do come over to the weekly time frame, obviously if this starts bouncing back up, then we're going to see the S&P 500 start to come back down. And I do think this is going to continue bouncing over time. You can see basically since December of 2017, it's just been pushing up, making higher highs, higher lows. Over here, we've got a macro trend line. Over here, we've got a macro trend line. Over here, we've got a macro trend line, which we've been holding quite well. And we're coming right back down to this. So it's very likely that we rally a little bit more coming into the CPI data, and then as we bounce from this, we take a huge run back up to the upside for the implied correlation. Implied volatility will also take a huge run to the upside, and with this, we'll see the S&P 500 top back down and start running to the downside in the next few days. As I said at the start of the video, I've come to the conclusion that I don't think the forecast is going to be accurate. I do not think that we're going to drop down to 6.5%. I think we're going to probably drop down to maybe 6.8, 6.7 or something like this, which is going to be hotter than forecast, but still lower than the previous. So with this, once again, like I said, markets are currently pricing in that we're going to be at 6.5% and down at 2% in July. So what happens if we don't get 6.5%? Well, of course, the markets will be disappointed and will start running back down to the downside after obviously pricing in a tiny pump in, maybe an hour. Maybe the pump will happen just before the CPI numbers. Inflation will come out at 6.8% or just hotter than forecast, and we'll start breaking back down to the downside. How have I come to this conclusion? Well, if I do come over to Trueflation, you can see, the leading categories, or rather the biggest baskets in the CPI, are food and non-alcoholic beverages, which is 15%. If we come down to housing, this is 23%. If we come down to transport, this is 20%. If you look at transport, since November, transport has basically been slashed in half from around about 8.4% down to 4.63%. If we come over to housing, however, is a very large importance on this scale. This is 23.2%. And this has not moved whatsoever in November. If we look at, where this was at the start of November, 6.5%. If we look at where this was on the start of December, 6.45%. So really no change over here. And if we come over to food and non-alcoholic beverages, and we'll look at a couple of other futures for food in just one second. But you can see, in November, this was 9.36%. Start of December, this was 9.46%. So it increased a tiny bit. But all in all, I'm not really seeing that inflation is dropping at a monumental rate. And there's a couple of other signs which are bad for inflation right now, which could potentially predict that, hey, inflation might come down for a little bit more, but then we might see another monumental bounce maybe into the end of this year or maybe into next year, which is also Michael J. Burry's opinion. So there's a few charts I want to run through. The first one is going to be, if we look at the top of the screen, we can see the US dollar's performance against the Chinese yuan. When China's economy outperforms the US, this is bad for US inflation. Let me show you what happens. So you can see US dollar underperforms against the Chinese yuan, underperforms against the Chinese yuan. You can see a jump in inflation. You can see over here, jump in inflation, a slight breakdown as we had a bounce back up here. This was actually where the top was. But nonetheless, from this period over here, inflation still pushed up. You can see US dollar underperformed Chinese yuan. We bounced up, broke back down, and then started pushing back up again as the inflation, as the US dollar started to outperform. You can see inflation started to get curtailed. And then what happened in May of 2020? The US dollar once again started massively underperforming the Chinese economy. China was massively out trading them. And because of this, the US inflation rate went on a massive rampage. Now, there was multiple reasons why the headline inflation in general went up, but this is nonetheless a very interesting correlation. You can see since the US dollar has once again been outperforming the Chinese economy, inflation has started to top out on a year-over-year basis and start to roll back down. But for the past few months, the Chinese yuan is now outperforming the US. And if we come over to the past week or so, you can see the Chinese economy has reopened, and we're seeing, the US dollar heavily underperform as China gets back to its regularly scheduled business. Now, Let me get rid of this now because we won't need this. Moving on to another couple of charts, I want to talk about some leading indicators for inflation as we're wrapping up this video. We're going to be looking at copper futures and live cattle futures. Now, in terms of copper futures, you can see, once again, a very nice leading indicator for the markets. Once copper futures started to run up in March of 2020, we all know what that was. Once, the inflation started going up for copper, you can see this was a leading indicator because the interest rates broke down a little bit, but then as copper futures continued to snap up to the upside, you saw inflation take a huge run to the upside. Definitely go check out this chart if you want, but then you can also see what happened when copper futures rather topped out. You can see they started to break down, and a couple of months later, you started to see the United States inflation rate start to break back down to the downside. And right now, copper futures are running and running and running for the skies right now, making higher lows and higher highs. And it's not a good sign for the US interest rate. And it's not a good sign for the US inflation rate, just like this chart over here wasn't a good sign for the US inflation rate. And if we do come over to our last chart, if we look at live cattle futures, so, more or less looking at food, this is just another thing that we can look at. Eggs as well. If we do, I think we've got the chart for eggs over here. If we look at, grade A eggs in terms of the city average in the US, these are running to the upside right now, which is not a good sign. You can also see live cattle futures, another leading indicator of the markets. Once inflation for cattle started to run up to the upside, you can see, once again, just like we saw with copper futures, this is a leading indicator. The inflation rate took one last run to the downside, and then as we had this monumental rush up in terms of the price of live cattle, we're starting to see the inflation rate soon follow. Now, what's interesting again is, once again, this is a leading indicator. Live cattle futures topped out on the 1st of February. Inflation started to push back up. And as the cattle futures were coming down, that's when inflation topped and started to break back down. But since then, in the past couple of months, the price for live cattle, the price for eggs, the price for copper futures, a lot of these leading indicators are starting to run back up to the upside, which is not good for the inflation rate. Mainly, this is the number one important chart, how the US dollar performs against the Chinese economy. Is very important in terms of how the US can sustain its interest rates. And once again, the markets are thinking that the inflation rate year over year is going to drop to 2% in July, and we're currently at 7.1%. That's a fairy tale. And why are the markets rallying? The markets are rallying on this assumption that we're going to be at 2% by July. In my opinion, it's not going to happen. But once again, in the immediate short term, keep an eye on Bitcoin. Bitcoin could push up to basically 17,900 just before the CPI numbers. And if we do get, a hotter than expected CPI, 6.7, 6.8, 6.9, it's very likely Bitcoin tops out around about 18K. And for the S&P 500, it's very likely we get a little bit of continuation up to the 618 Fibonacci, 3,975. And it's even possible we push up to 3,995. The highest I see is pushing up to is this target, 4,040. But nonetheless, no matter what you're looking at, whether you're looking at the charts, whether you're looking at fundamentals, whether you're looking at liquidity tools, once again, we talked about this bounce back in liquidity, but everything is pointing towards the fact that, hey, inflation may be coming down a bit, but the markets are getting very, very over exuberant. They're getting very excited, and they're basically living in a fairy tale, believing that inflation is going to come down to 2% in, another 6 CPI readings, which just does not seem to be very plausible to me. Now, that's all I've got for you for this video. Like I said, I will post the actual numbers that do come out for the core CPI and headline CPI as soon as they come out over on my Twitter. So be sure to follow me over on Twitter, turn notifications on at 618_cowboy. All I've got for you for this video. As always, if you do enjoy the content, let me know down below by leaving a like and a comment. Share the videos with your friends. If you want to come and join the Discord community, be sure to head over to the About section and find, my Twitter, Discord, Instagram, and merch store link down below. All I've got for you for this video. As always, it's been your boy Cowboy Trades. I'm out. Peace.